All right, traders, and we are back. It's 12 o'clock. It's midday. The midday report, in Tandi's words, the midday drive. It's good to be with you guys here. Our second TDM Academy live trading session. Guys, it is an absolute pleasure. To everybody that's here for the very first time, a warm welcome. Let's get started, but we got to get that risk warning out there, guys. We are trading on margin. It does carry a high level of risk. And so remember, if you're not skilled, you're not educated, you're guessing, you can lose all your capital. So please make sure that you get in with the academy, yeah? Let's not construe this as advice because it is opinion. And we want to get started and make sure that everybody's up to speed with what's going down at the moment. All right, so good afternoon, guys. Good afternoon. Let's see who we have in the chat facility there. I see G's there. It's about to go down. Tanya, I see you there. AV, I see you over there. All right, I see you. Let's see who else. Tato, I see you right there on top. Wonderful, guys. I'm ready to go, man. It's 12 o'clock. And what do you know? We're back at the same area we were at, all right? But we're going to quickly take a loop around the world real quickly. Let's go back and see what's happening in the Middle East with the oil price, okay? Firstly, the oil price, we can see we're trading at $92 a barrel. This is the hourly time frame, traders. This is the hourly time frame, all right? Now, I want you to notice something very important here. There's been about 1, 2, 3, 4 hours of trading versus this 1 hour here. It took about 3 hours for it to reach the same level at $91 a barrel. Now, that tells you something about the pressure that is actually happening here, everyone. Is everybody clear with what I'm mentioning over there, guys? Quickly in the chat facility, let me know. Quickly in the chat facility, traders, quickly. All right. Tato, I'm going back to drop it like it's hot. Drop it like it's hot. Just drop the likes. Quickly, guys, man. Let's get it out of the way. Doc, I see you there. Brett, I see you there. Jules, good afternoon, man. So 3 hours of trading equates to this one here. It tells you about the pressure of the sellers that's in the buyers. All right, lots of divergence here, guys. Lots of divergence in the oil price. Look, I'm going to be frank with you guys. I anticipate the oil price to come down a little bit. That simply means it's going to have an impact on inflation. It's going to have an impact on the treasury yields, and therefore it will have an impact on the United States dollar. All right, that is a fact. It's going to happen. So I want to try and take as much as I can at this moment in time. If you remember at the start of the week, we said that all of the major movers, your major pairs, your major indices, your major commodities, these guys are actually moving more bullish than they are bearish, okay? The NZD USD is actually more bullish, Euro, the pound, all of them are actually more bullish, but there is a bearish pullback that's happening on them. That is what we are attempting to take advantage of. Now, obviously, we're going to be working with the structure here. If the pullback exceeds its levels where it now needs to start pushing up again, there's nothing that we can do but adapt. So if the oil price comes down, we might be seeing some of the strength come into the higher time frames that we're going to find on those, the NZDs, the Euro USDs, and so forth. But so for today, I'm focusing heavily on the intraday movements, all right? But I will be finishing off the week with the bullish momentum that I started on Monday with. So how I started the week, I'm going to end the week. But during the week of Tuesday, Wednesday, and Thursday, all right, inside, I'm dealing with the intraday movements of that, okay? So the oil price, don't be surprised if there's any craziness that happens, guys, all right? If there's anything that comes out politically, all right, if we see that there's missiles that were flying up and down, please do not be surprised, okay? So right now, the oil price is still intact. It's still above the 89. It's at the $92 a barrel. And obviously, this is bringing a bit of strength into the dollar, okay? The silver price, it's still at the same area that we left it at. Nothing has changed here. It's still at that inverted commas weakness. There's been no pushback from the dollar at this point in time. I've been keeping tabs on the dollar index, the DXY. It's been pushing down. It's been weakening. So that's one of the other reasons, not the whole reason, one of the other reasons. Because, guys, we have to be frank here, that it's not one single reason that is the reason for the price to be doing what it's doing. Everything is intertwined into one another. So you cannot just say in black and white that says this is the actual reason why it's happening. It's not true. There are different factors and they all merge into one another. So at this point, the DXY, the weakening of the dollar, is one of the reasons why we're seeing that there is no strength that's coming in here against the silver price. The higher yields is also important. The lower yields are also important. If the yields are coming down, then obviously what investors are doing is they're taking their money out of the dollar and they're putting it into something else. But why would they want to do that, guys? Because the higher yields give them a higher return on investment. Listen to this, ladies and gentlemen. I'm going to say it again. The higher yields gives them a higher interest. So they will put millions in there, guys. Why? Because of the interest that comes. So if the yield comes down, if the interest rate comes down, they're not interested. What is the purpose, or at least, let me be frank and open. What is one of the purposes of running business? What is one of the purposes of running investments? Instead of us only making it about profit and to make money, investment can be very, very exciting. It can be life-changing. It can alter your mind. It can bring exposure. There's many reasons why investments are great, all right? One of the critical areas is simply because there is a return of investment that's expected. So if the yields do not push up, money's not going in there, guys. It's that simple. That means we're going to see the assets like silver is going to appreciate. Assets like gold is going to appreciate. We're going to see assets like Bitcoin, it's going to appreciate. It's going to put pressure on the dollar. So I would be failing dismally. In the words of my father, I would be failing dismally if I enter any short here right now. There is no signal. I said to you at 9:30, there is no commitment. So I cannot commit to this specific trade if there is nothing that is giving me a reason to, all right? The gold price is a little bit different because the gold price has committed already on the smaller time frames below 4475. All the other time frames then reluctantly, all right, really just stayed above or, chose not to come down and close beneath the 4475. Now, the question is, will the pin of the lower commitment be enough for sellers? Will the pin of commitment at this area be enough for the others to commit further down here? Guys, we don't know. But at this point in time, what I want you to realize about the dollar, the entire day, the dollar's been strengthening. So don't count weakening, sorry. So don't count the dollar out yet. Don't count the dollar out yet. It is midday now. We still have 3 o'clock. We still have 6 o'clock. We still have 2 sessions to come back and to bear witness, all right? Whether the dollar is going to continue its weakness for the day or if the tables will turn and we get a stronger recovery coming through. That can happen, ladies and gentlemen, all right? But for now, the dollar is pretty weak, all right? So it's not committed here, guys. I'm still in the gold trade, all right? I did say if it has to break above yesterday's high and this morning's high, I don't think I'm going to favor staying in gold for now because look at this impulse. At some point, there has to be a correction. There has to be a correction. So it may not correct all the way down to here, but if price pushes up further, the correction, let's say price pushes up until there, the correction might stop over here. Hold on for me. Hold on. Let's do this. Let's say it pushes up till there. The correction might then come till there, all right? Might push up until here, which is something that I'll be waiting for. So I may take a punch on the chin right now. if it happens. That's what I did with USD Swiss franc. All right. And no doubt, guys, unashamed, took the punch. That's okay. If the gold price advances up till there because of what's happening economically, because of what's happening with the monetary policy, I'll take it on the chin. All right. But then I will wait for the weakness to set in so that I can capitalize and make that back. That is very, very, very important. Are we together? Yes, you will find it there. All right, Valley, you will find it there. TDME. All right. So that's the gold price, guys. NZD USD. It's getting into, look at this, guys. It's getting into the deepest corner of a resistance. Now, I want to share this with you. Look at this, guys. Can you see 1, 2, and 3? Those are 3 areas of divergence, making that a very strong resistance. Very strong resistance. Are we together? At some point, guys, that's the 15-minute. At some point, due to this divergence, this impulse needs to correct. This impulse has to correct. It may not correct all the way down to where we would like it to. Maybe it goes up and comes till there. It doesn't matter. We will still get in. We will still get in 100%. And guys, this is the beautiful thing about understanding what you are doing. The market may not move in your favor today or this hour or maybe for this morning or this afternoon, but at some point, if you know how to exploit the weakness of that impulse, all right, then obviously you will get what is coming for you. All right. So the NZD USD has still advanced up a little bit here. You can see there's been no weakness in the Kiwi, and that is what I'm saying to you guys. From there to there, price has moved up by 0.65%, all right? Just over 0.5% of Kiwi strength. Only 39 points or 39 pips. Price can still come down. Do not count it out. Do not count it out for the day. It's only 12 o'clock right now, all right? The same with the Euro USD. Now, you can see the correlation is also a little bit tricky and sticky. The reason for that is because we're looking at the yields, we're looking at the inflation, the oil price, and you'll see that generally when you get the major pairs that moves with the dollar, with the gold, you normally find that the correlation is working well. Now, the gold price, you can see here, is a little bit more bearish. Do you guys see that at this point in time versus the Euro USD? So the correlation is not running 100%. So please, guys, don't think just because we may be selling gold that the euro is also going to come down. It doesn't mean that. When you have the volatility and the uncertainty of geopolitics, when you have policy statement that is a little bit foggy, you're going to find the correlation is not meeting each other at that equilibrium. So don't think just because we may be selling gold that we're going to sell Euro USD, that we're going to sell NZD USD. Nope. Now we are dealing with them contextually and we're dealing with them subjectively. All right. Its own condition is what we are dealing with here. We are not dealing with them holistically. The same with the USD Swiss franc. Yes, it is still a little bit bearish here. But remember, it's not even gone above the weaknesses. This is still a sell-off from what happened yesterday. It's just a continuation that has happened. Now, if we look at today, all right, this could be a support. I also want you to feast your eyes upon the divergence that is actually taking place here on the 1 hour. There is divergence taking place here. So because there's strength that is coming. Now, some of you guys will remember this. Where's the guys? Some of you guys will remember this. I spoke to you about the levels in the RSI. I said to you that you need to start looking at how to use certain indicators well. So as an example, the RSI, you can look at the 50. Are we together, everybody? You can look at the 45 and you can look at the 55. So these 3 areas is the equilibrium of the RSI. I know out there they say it's the 50, it's the 30, it's the 70. I put it to you guys, there's different ways to use a tool, all right? So right now, price on the hourly frame is still in the selling zone. The moment we start seeing a dip above the 45, it's now moving into continuation zone to the upside. Now look at the hourly frame here. If I go to the 30, all right, to the 20, the 15, the 12, let's go and see what this moving average is doing. Does the moving average start moving to the upside? Can you see how it was already? So this is actually a correction from strength. Look at that. It's already at the 50. It's gone above the 45. All right. So which means it's just a matter of time before we start seeing the average move up a little bit further above the 45. When that happens, it means there's a bit of strength coming into the US dollar. Are we together, you guys? So this is a continuation from what happened yesterday, the sell-off. Now, what happens in a sell-off, you'll find 2 to 3 corrections happen. 2 to 3 corrections can happen before we start seeing a turn. This is one. How do I know it is a correction? Because of the zigzag. So there may be some more price coming down, another correction, and then you might see price coming down again, but then you see a much lower or shorter correction before a support starts forming. At some point, it has got to push to the upside. Now listen to this. I want you to feast your eyes on this. AV, was it AV? Was it AV? Was it Dixon or was it Savage? I spoke to you guys about USD Swiss franc, and I had it on a 4-hour chart. And I said to you guys, and I placed this area here, and I said, guys, on the higher time frames, I'm anticipating USD Swiss franc to push down to this area over here. I cannot remember who it was. It was either Dixon, AV, or it was Savage. It was one of you three guys. And I placed this here, and I still got into the short there. And I said, I'm anticipating it to come down to that area over there. And as you can see here now, ladies and gentlemen, it seems like that becomes the reality first before we start getting a correction. All right. But guys, I'm telling you, if it does push up until there, that correction is going to be marvelous. That correction is going to be phenomenal. So sometimes it pays to wait just a little bit more or a little bit further. All right. Just holding on for it to meet that specific area before you can have your place. All right. The same with the GBP USD on an hourly frame, guys. Lots of divergence for the day. Price at this point in time for today has moved up 61 pips. All right. So we want to see what happens here. There's still a lot of divergence. You can see it from there to there, from there to there. So this impulse, there has to be a correction, guys. At some point, there has to be a correction. The same with AUD USD. The same with the USD JPY. There was an attempt to go up. You can see we're still hanging around the same support area. This is a support. Lots of divergence. That's a support. So what I'm going to do now is I'm going to go back to the NZD USD and I'm going to redo this for some of the guys because this weakness is in, I could say in the center. I could say it's in the center of the impulse. So I'm going to redo this one. Let me quickly do this. Dixon says it's me, but I missed it. All right. All right, Dixon. Thank you for confirming that, my friend. All right. So let's redo NZD USD. This is the impulse. All right. That's the impulse. Let me quickly highlight what I would like us to look at right there. Up, 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 right there. All right. And what's important now, watch this. Watch very carefully. We're going to find the weakness in the impulse. I'm stretching down. Nothing yet. Can you guys see that? There's nothing yet. There's no weakness yet. Can you guys see it? No weak. Oh, there we go. There's the weakness right there. Can you see that, ladies and gentlemen? So what I'm going to do now, I'm going to highlight the weakness over here, and it's in the divergence. Look at that right there. It's in the divergence. There's the weakness. So which means there is 3 impulses that has happened in that one. Here is number 1. All right. Here is number 2. All right. Let's go. And obviously now we have, look at this, impulse number 3. But look how short the impulse is. So what we're going to be doing now, guys, the weakness has shown up again in impulse 3. So what we're going to want to do is I'm going to stretch my fib, not from impulse 1. I'm going to stretch it from impulse 2. I'm going to stretch it because that's where I want to take my profits. Remember, guys, although this is one impulse inside these microstructures, so we're trading the microstructures intraday. That is what I'm doing here, all right? So let's go and find the weakness now in this area so that I can trade it from this area, or at least trade it from that area down to this area over here, all right? So let's go and see. Let's go and see. I'm going to take this away, and I'm going to zoom in, and I'm going to find the weakness there now. 15 minutes. It's bearish. Look at that. It's bearish, guys. Nothing yet. Aha. This is what I want to see. Can you guys see that? This is what I want to see. Look. Yes. Some more. Some more. Give me some more. Look at that. 1, 2, 3 structures over here. This 3, 1, 2, 3 is what gave us that impulse. All right. Let's go. I'm on minute 4 now. Minute 3. Now, the reason why I'm not going to choose minute 3, there's too much here. So I'm going to use minute 5, okay? And I'm going to highlight all those structures now. Look, there's the first. All right? Here is the second. And here is the third. And I'm going to find the lows on each. Why am I going to find the lows, guys? The reason why I'm going to find the lows is because I'm trying to find the weak spot. So this is the low that was responsible for all of the push to the upside, okay? And here we have the other area. So watch now. Watch very carefully now. Watch very carefully because I'm going to connect it all to the second impulse. Watch. Let's highlight there. Let's highlight here. And I'm going to go back now. Second impulse, guys. I'm looking for the second impulse. There we go. That's it. You see there? Second impulse. The foot of the second impulse. Let's take this off. Let's take that off. And now here's my fib. There's my fib. And this is what I'm looking at, ladies and gentlemen. So from here, I'm expecting the first move to the downside. That is roughly about 12 pips down there. Now, if it breaks that area, if it breaks the zone over here, impulse 1 becomes powerful for us. Is everybody clear on that? This is the top of the impulse. If I go to 1, that's the top of the impulse. This is where the money's sitting. This is the first stop. So if it's like that, first stop, correction, continuation. You see, that's where the money is. Now you can choose. Would you like to profit here or leave it, let it do what it does, and then after that's done, we have the correction. After the correction, you have your lower high, and then you have a continuation to the downside. Is everybody clear on what I am mentioning here? I think that's pretty straightforward the way I've just explained it. Is everybody clear there? A quick one. Let's just see if the guys are with me here. Quickly, guys. Everybody good. Everybody good. Everybody good. Everybody's moving. All right. So that's the first impulse. Now, what's important for us to understand, there's another weakness here, guys. Here's the weakness. Here's the second weakness now. Right here. In the impulse. That's the second weakness. The first one has already been done. I've already done it for you. Okay? First weakness, and it's because this impulse is so short. That's why you have a shorter distance. All right? But this weakness gives us access to a lot. All right? So let's now go in. Let's go in and find the weaknesses there. Let's go in. I can see it here. I can see it. Hold on, hold on. See that there? See that there? Right here. I'm on the 3 minute now. Look at that. 2 minutes. I'm going to use the 3 minute. So I'm going to use the 3 minute, guys. And this is the weakness. Look there. Do you see this? And you see that over there, right? Watch very carefully now. Right there. There's the low of that structure. Here's the low of this structure over here. Let's do this. Hold on, hold on. Let's just go to work here, guys. Let Ash go to work here. All right, so look at this now, guys. Look at this, ladies and gentlemen. All right, look at this. Look at this. So that's the second. Ooh, this is beautiful. Look at this. Nice move. This is a nice move. Look. See that? So first impulse, second impulse, third impulse. Do you see that? So from there now to there. Look at this. From there. 34 pips. 34 pips. Guys, I've literally scaled it down now. I have scaled it down. I've taken that one impulse, divided it into 3. This is 3 trades. 2 trades, sorry. Look at this. 3 impulses. First trade from that area to this area. Look at that. Look at that. This is the first. It's only 12 pips there. If price breaks this area, that's the next area. Look at that, guys. There's 2 trades here. There's literally 2 trades. Let me just get the line. And that's one impulse, guys. One impulse. One there. And now here is the second one. Right over there. Look how long that one is. Very, very, very important. Can you guys see that? Is everybody tracking with me here, guys? Quickly, quickly. Everybody with me, guys? Everybody with me? I think it's pretty straightforward. Exactly, young son. The second trade is massive. This is all in one impulse. That's all in one impulse. Look at that, guys. That's all one impulse. Now imagine if I switch to an 8-hour. Listen to this, guys. If I switch to an 8-hour, that's all that I'm trading. Look at the rest here. This becomes another trade, but inside of the 8-hour impulse, there's more. This is an hourly impulse that you saw. These 2 trades only come from an hourly impulse. It's not an extended version. If I go to the daily, look what I'm attempting to trade there. Now imagine we did it from there. How many weak points do we have here? How many times do we scale? So this is like steps. This is steps, ladies and gentlemen. That is literally giving you the opportunity to scale it down, because that is what business is. It's either you scale up or you scale down. So why would the markets be any different? Value can be scaled up, and so value can be diminished. So at this point in time, guys, from a stronger dollar perspective, if the dollar comes out and it actually strengthens nicely, then this is what we're going to be looking at in one snapshot. In total, there's about 50 to 60 pips that we can gather in this entire specific area here. The first one and the second one in total is about 60 pips. That's if the dollar strengthens. Right now, we're seeing that it's struggling. Silver, look at the gold. It's struggling right now. So this reality becomes our reality if that happens intraday. Please pay attention to what Ash is saying. I'm referring to today. Now, let's just say price goes and creates new highs today, far past what we are seeing here. That means I have to switch over to the higher time frames, and I need to consider that price is actually pulling back higher up from the impulse that you saw here. Even further up, look at that. I have to consider that price is finishing up the move that came from a weekly time frame. Do you guys see that? On the weekly frame, there hasn't been any recognition that this correction is done. Look at that. Remember, the blue tells us that the correction is more or less done. On the weekly, there's no blue, meaning this correction can't stretch up till there. Only on the daily is it showing us that there's a correction that's been done. But for the week, being today, it's Thursday, guys, it can still go up. And once it's up there, guys, then we're going to start looking at what? Going back to the shorter time frames and finding even more trades now. That's important to understand. So we're scaling this piece by piece, all right? I'm seeing G there, the dollar going to take advantage of today's fundamentals, jobless claims. Yeah, look, we do have some stuff coming out today, right? To be specific with you guys, let's quickly go there. Let's be a bit more specific today. We have Thursday at 2:30. Unemployment claims, 210,000. We got the manufacturing index. You can always jump on the folder there to see, guys. All right, the actual has to be a bit greater than the forecast. All right, and you can see here, guys, it's a survey. Are we together? So 24.1. Are we together on points on the index? If we get an actual here, if we get a higher number, this could be great for us. This could be great for us and what we would like to do for the charts, at least today. Do you guys see that? So nothing's really changed from 9:30. We're still seeing a bit of a weaker dollar. All right. Has there been a fight? Yes, there has. There's definitely been a fight. We can see it with silver. We can see it with the gold. We can see it with the NZD. We can see it with the Euro USD. All right. We can see it with the GBP USD. There's definitely been a big struggle here. Now, some of the biggest reasons is, again, the yields that have come down. We saw inflation easing a little bit there. So money has gone out of the US dollar and it's gone into other assets, other instruments, other currencies. All right. Other flows it's gone into for a return. But let us wait and see, because this impulse over here, at some point, we're going to have to come down. Look at the USD CAD. Nothing's happening here. S&P 500. We're still at the same place. Can you guys see this? We're still at the same place here. All right. If you're looking at the Euro CAD, we're still at the same place right over there. Bitcoin, look at this. Look at this. We've now passed the 70. We're at the 71,000. We're up at this zone here, which we had placed a block for. Look, we're up there. Look at that. US 30. For all the guys that are and has been watching it, I'm still seeing 52,000. Now, yes, we had a bit of some divergence, but it wasn't much. We're still seeing 52,000. It's not far from there. Look at Solana, guys, still pushing up. Look at that. So we are really, guys, we are really not far off at this moment in time. What we are noticing now is just fractional movement. This is all fractional movement, absolutely normal. What we would like to see today, and the reason why I'm being so specific, what I would like us to see today is if we've analyzed something, all right, like example saying that we anticipate the US dollar to be strengthening a little bit later on, If that does not happen based on the economics that we have spoken about, I'm talking about the data, and also, guys, on some of the other assets performing in the way it's, performing. If it does not turn out that way, then what we're simply going to do is in real time, we are going to adapt. And that is part of demonstration. That is part of showing the guys that listen, guys, you don't have to stay in one place all the time. We've now adapted with the NZD-USD, all right? We have two areas here that we're looking for. And at 3 o'clock, when I come back, I'll be doing exactly the same thing with that of Euro-USD, all right? I'm going to be doing the same thing with that of GBP-USD. I actually had to do that with Euro-AUD. I bagged some profits on Euro-AUD, but this morning, I took the liberty of coming in for round 2, Dr. Ahmad. Round 2 here to come in and bag some more cash here. Lots of divergence on Euro-AUD. So if this one can come around and break beneath this area, it's going to be a beautiful drop here for about 66 pips. So let's watch it. Let's see how it goes, guys. All right. Nothing much has changed here. Even the AUS 200, it's still at the same place. So let's wait for 2:30 today. Let's wait to see what happens at 2:30 today. I'll be on at 3 o'clock. So then we'll see what the index has shown us. And we will also see, what the unemployment claims has done for us. Remember, those are both of them medium impact data. It's not high impact, it's medium. And it's going to be interesting to see if it does have some form of influence on the markets. All right. But I'll see all of you guys at 3 o'clock. No sudden change, no immediate change, no aggression. Guys, there's times that we can go for 50 minutes. There's times we can go for the full hour. There's times when we go for 40 or 45 minutes. It all depends on the market at that given time. Now, why do we do that? And we do it as real as possible. Because you as a trader, when you buy yourself, sometimes you'll spend time 10 minutes on the charts and you'll move away from it. Why? Because nothing's happening at that particular time. So myself and Tsepo, we make these experiences as real as possible. We don't force where we don't need to, and we engage where we have to, all right? But if there's nothing happening at that given time, it's okay, all right? We have to live. The markets is not our life. It's part of our lives. Don't forget that. We're still human beings at the end of the day, all right? Some have families. Are we together, guys? There are some guys that have, that's on a lunch break that need to finish up. So we make all these experiences as close to reality as possible. All right. That's why there's 4 a day and not just once. There's 4 a day because we're meeting all our students at different times of the day and walking with them in this journey. All right. So guys, let's push back here at 3 o'clock. Get something to eat. Make sure that you hydrated as well. And we'll see what that unemployment claims and the index, the manufacturing index, has done to our dollar. At this point in time, to conclude here, right now, the impulse on the Kiwi, on the Aussie, on the pound, on the euro, on the USD Swiss franc, all of them have been extended since yesterday. And what we are gunning for is a possible pullback to actually take advantage of it, all right? That is where we at this point in time. Let's see how it goes, and we'll meet back here at 3 o'clock. All right. Have a lacquer one, guys. You guys were fantastic. We're doing very well. I'll see you guys at 3 o'clock. All right. Ciao, ciao, everybody. Have a good one.